going on, y'all? My name is Trey. This is Investing by Numbers. This is a channel about stock market investing and other forms of investing. We look at stocks. I like to do deep dives on fundamentals of companies, what I'm looking to buy, stuff like that. This is going to be an easy video, really just a vlog on my portfolio. I'm going to go over what I'm holding in my portfolio and what I'm buying actively and other stuff like that. I took the week off last week. I was in Washington, D.C., going to see the sights and doing other things. So now I'm back and just kind of coming into the swing of things with an easy vlog. So if you like this kind of content, if you like stuff about the stock market, we talk about, I'm always talking about how to buy stocks at good prices, how to find companies that are great companies, that are safe, that have great growth ahead of them. If you like that kind of content, please like and subscribe and comment below. I'll respond to all the comments. So on that note, let's check out what I got going on. So looking at my portfolio, total, I've got just under $186,000 in between two accounts. I've got a Charles Schwab account and I've got a Robinhood account. This is the combined total of both of those accounts. My Charles Schwab account I've had for a few years, and I've used my Robinhood account off and on for the last few years. But right now, Robinhood is my active account that I'm adding money into. I'm eventually trying to get it up to the point where it's equal to my Schwab portfolio. I'll pull up the Schwab one right here. So yeah, this one's got just over 114,000 in it. It's my bigger portfolio. I don't actively add money to this portfolio. I'm just holding. Now, if I sell something in this portfolio, obviously I'll keep the money in it and buy stocks buy new stocks in this portfolio. The only thing that's really different, I'm holding the same stocks in my Robinhood account. The only thing that's different is my really Shopify and Zoom. My price points, my price averages for shares in my Robinhood account are a lot better than this account. But so like with Zoom, I'm down over 10,000 in this account, but I'm up like 4,000 in my Robinhood account. So overall on Zoom, I am down like, I don't know, maybe 6,000 or something like that. But Shopify, I've got a very small position in my Robinhood account. Shopify is my biggest position between both accounts. And I got to say, I just hit Shopify finally overall hit a double up for me. Pretty excited about that. We'll come over to my Robinhood account. And this one's got over 71,000 in it. This account I've used on and off. This is my all-time. So like in the early days, I had very small amounts, and then I invested this was my main investing portfolio up until 2020 when I liquidated this account and got kind of stupid and started doing a lot of short-term day trading stuff. That didn't work out for me, and so I went back into long-term investing around end of 2021 is when I started doing long-term holdings here. I started with Shopify, Zoom, and PayPal. So that's kind of where we're at there. But this account obviously didn't do a whole lot up until I started adding. I really started making this my main account in the spring of 2024. And this has been what I've been mainly adding to. I invest. I do investments every week. Even if it's a little bit, I put money into this account on every Friday. Even if it's just minimally $100 a week. I put 25% of my pre-tax income into stock investments. And so I work, but my main job is I'm a real estate agent. But if I don't have any houses closing, obviously I have no income because all my income comes from houses closing. But I do have a small business I work for on the side, installing blinds and shades. I kind of work per job. And so I invest 25% of what I make over there into this account here every week. that work is small. Most of the money I make is through real estate, but I can't sit still, so I like doing something during the week if I've got not enough real estate jobs going on. So let's check out what I've got going on here in this main account. So Alibaba has been doing really well the past couple weeks. I made a really stupid decision back in like April or May of 2024. I had double the amount in this. I was holding twice as much as I'm holding right now. And let's see. So I've got 91 shares. It's up 72%. Now I had 180 shares originally, and it was up, I think, around like 10 or 15%. And I kind of had the feeling of, man, Alibaba's a Chinese stock. I started to feel like I wanted to mitigate some risk and split that position in half. And I sold off half of the position with, whatever it was, a 10 to 15% gain. And that was only within 2 or 3 months. That was a pretty good gain for 2 or 3 months. But I invested it into Aehr Test Systems. And I still like Aehr for the long term, but this thing is down considerably from where I bought it at. I bought it somewhere around this level here originally. So in the summertime, I started buying this thing right around here when it started to pick back up, and it's just kind of gone down ever since. We've had some spikes here, but it rejects every time, and we're kind of at a pretty low point right now. But obviously on this position, I'm down almost 38%, and I'm okay with that right now. This is a very speculative company. They're profitable. They've got their net income's kind of inconsistent, but I really like their long-term outlook. So I'm not going to go into a lot of detail about Aehr Test Systems, but I really like the price they're at right now, but I don't want to invest any more into them. There's a lot of other good deals out there that I'm investing in, and I don't, especially with a company that's kind of a smaller cap, I don't like to go too heavy. I like to keep it like 5% or less of my portfolio. So Aehr Test Systems is, even though I really like the price right now, I'm putting money into other places. I'm okay with my $17.30 average here. I think that's a good price for the company. I mean, and I have bought it at lower points to average down from my original position, but I've got about as much money as I'd like to have in it right now. So Alibaba, though, looking back on it, hindsight's always 2020. I wish I would have kept all my money in Alibaba because it has done fantastic over the last, month. We're up over 50%, and that's because they've kind of they're helping provide AI to Apple, and so once they started announcing that, their stock has just been going up and up and up and up. Obviously, I've got a $72.50 position average here. Alibaba has been beat down big time over the last couple of years. Ever since COVID, they've been beaten down. So I was buying it in this area here. It was a great deal, and so as we've seen it's picked up ever since, which is great. Next position, we've talked about Aehr and Alibaba. NVIDIA. So if you follow my channel, I've talked about NVIDIA a lot. I love NVIDIA. I think they're a fantastic company. They got fantastic growth. But this thing here, I've been telling people under a 50 PE is my line in the sand. I like NVIDIA under a 50 PE, and that is under $127 a share. That's what it's been since their last earnings report. So I think we did hit it back in December, but it was only one day. I didn't have a chance to buy it then, and and just recently it dropped down below 127. But I was only able to pick up not even a whole share. I picked up just, what do I have? Oh yeah, 0.8 shares. So I was able to buy it on 1 week, and it's gone up since, and it hasn't dropped down below. It was only under 127 for 1 week. So I was preaching about under 127, and I was able to pick up a little bit, but you know, I haven't been able to get more. There's really no telling what it's going to do in the near term. If obviously if it drops back below $127 a share, I will be buying more NVIDIA. I really like NVIDIA under a 50 PE. And they're reporting earnings on the 26th of this month. So that line in the sand at $127 will probably change slightly. So, but whatever that new number is for a 50 PE, I'm willing to buy under that 50 PE level. NVIDIA is growing at a rapid rate. And so I'm good with paying, you know, a 49 PE on it. I think NVIDIA's got a lot of upside potential, and especially since they've been running sideways, you know, since the summertime, I think it's a great time to buy NVIDIA under that 50 PE, $127 a share. Next on the list is Nike. So I'm actively buying Nike. I've got roughly around $6,000 in this position. You know, it's down, I guess $5,800 if it was back up at where I bought it at $78.52 a share. It's down about 7%, but I really like Nike. I've talked about Nike in other videos. They're a great company. Their revenue and net income just continues to rise over the years. They've obviously gone through some rough times in the past couple of years. And anytime in the past that Nike has had, you know, a rough year or two, it's always been a fantastic buying opportunity. Sometimes they might try something new. It doesn't work out. The numbers get affected, and they kind of have to, return to what they knew and get back on track. And that's what they're having to do right now. Nike, what do I have here? I like it under a 25 PE, which is right now anything under $81 a share. I think is a great price for Nike. So that's what I'm kind of looking for with it. Now, I'm not really picking up any shares in the next week or two until like other positions that are smaller positions can get up to Nike's level. I try to invest. If I have like a new company I'm investing in, I try to invest in it until it meets, you know, the other companies I have, and then I'll bring everything up together if that makes sense. Right now, that would be like, well, obviously NVIDIA, if it was to get under a 50 PE again, I would try to bring that. I mean, obviously I've only got like $100 in it. I would try to bring that up to a few $1,000s if I could. I don't know if I will be able to, but you know, like Adobe, I've been buying. I consider it a buy right now. I've got roughly, you know, $440. I'm sorry, almost $600 in it. It's up, you know, almost 5%. I've been buying this over the last month or so. Obviously just about 1.3 shares. Adobe's a great company. I like it. Under a 40 PE is what I'm looking for on it, and that's roughly about $495 a share. So anything under $495 I think is a buy for Adobe, and it's done, you know, it's a great company. It's a subscription based company. You know, you pay for a subscription, you have access to all their design software and whatnot. And so we've seen it just running side. This is the 5-year chart, and it's just been running sideways for almost, you know, 5 years now, you know, 3 to 4 years or whatever. But it's just been kind of going sideways and in a consolidation phase. And I think it's got a lot of potential at the price it's at right now. Another stock I am actively buying is Celsius. Celsius is kind of right there with Nike. I've got about 5,800 or so, 6,000 in it at my cost average. Right now it is down 13%, but I really like Celsius for the long term. They've gotten hammered, you know, over the last year or so, and but they've got a lot of potential, especially in foreign markets they haven't tapped into yet. So I'm a big fan of Celsius. With Celsius, I like it under a 40 PE, which would be under $28 a share is kind of where I see this being a buy at. So obviously underneath $28, if my other investments kind of meet up to that level around that $5,000 range, I'll actively be buying more Celsius. So the last video I posted, was about GCT, which is GigaCloud. They are a new company, very speculative, but their numbers have been fantastic. So it's another company like Aehr Test Systems, which I was talking about earlier, that I really like, but I would definitely keep it under 5% of my total portfolio. And other companies like Nike and Celsius, which are large caps, they've got a lot more stability. And a new company, GCT, let me pull it up, has only been around for a couple years. And so they're highly speculative, and I don't recommend going like your whole portfolio into it. But if you're like me and you're adding in a few $100s a week, and you've got a large portfolio already, this is a great company to start buying. Now, I made a video of this last week, okay, or the week before last. And I was in Washington, D.C. last week, so I took a week off from posting. But I talked about buying this the week before last. Now, what happened is e.l.f., the makeup company, reported numbers, and their stock's already been beaten down quite a bit, but it crashed even harder and kind of hit a territory where I really liked e.l.f. So right after I posted this video, e.l.f. kind of crashed even harder, and that's what I ended up buying this past Friday. And I was thinking about buying GigaCloud, but for me, where e.l.f. is at, it's a much safer investment, and so I decided to put money into e.l.f. Now, I'm still watching GigaCloud. GigaCloud is profitable, and so that's fantastic for being as young of a company they are. And they kind of work they're kind of a middleman. They basically buy inventory from large companies, especially over in Asia, and they sell to smaller businesses, mostly over here in the U.S. And they're basically, what they do is, you've seen these Facebook ads and stuff that are selling products like paint by numbers, or they really focus their business on marketing. And so what they do is they find a company over in Asia to buy product from, and then they import it to the US and sell it through Facebook ads and Instagram ads and all that stuff. Well, GigaCloud is the one that kind of handles all that. They handle all the shipping. They basically they find products to buy in Asian markets and sell them in bulk to smaller companies in the United States that distribute them in the United States. And GigaCloud actually holds all that product too and does the shipping for that company here in the US. So if you were a company that really wanted to focus on selling products and marketing them, then GigaCloud would be a company that you would work with, and they would handle all your purchasing and shipping from Asia coming into the US. So I think that's actually a market that will continue to do really well here. Now, obviously there's lots of competition, but GigaCloud's numbers have been really good. I really like their numbers. So if you're interested, check out the video. I'll post it at the end of this video about GigaCloud. But I still think it's a great price. And here's the crazy thing I was looking at before I started filming this video. I was going through all my my positions, and I was writing down basically where my PE ratios were. I like to invest. I like to find a PE ratio that I feel good about buying a company at, and that's relative to the PEs they've traded at in the past. And so I'm literally looking at what I think a good PE range for a company is, and I like to get a better PE ratio value for that company. And so when I was going through making a list of all my investments here, and what P ratio I was looking at, and where that coincided with the prices, I was doing this one. This one I use based on a forward PE, and I'm sorry, not a forward PE. This one is profitable, but right now this one's trading at like it's over a 6 PE, which is really low. And with their revenue numbers and net income numbers, this stock should easily trade in the 20 to 30 range. Now, a lot of times what you'll see with a new company like this, they won't trade as rich because they're so new and they haven't really proven themselves yet. So they won't trade at those levels. But if they keep doing what they're doing, and in another year or so, this company should easily be trading in the 20 to 30 range. So for me, anything under a 15 PE for this company to me is a good deal. And so under a 15 PE for GigaCloud anything under $47 a share, and obviously we're at 20. And what's crazy was I was doing those calculations, and look at this right here. This spike right after the IPO got up to $48. So obviously whatever was going on here with the people pumping it up, they were good with buying it up to around that 15 PE as well. And you can see it got up here to 43. So got back up around to that range and sold off. So anyways, I don't own any GigaCloud, but I do really like GigaCloud as a small position. So now let's see. We were looking at Celsius and Adobe. So ELF is what I did buy this past week, and I only picked up roughly $100 worth or so. ELF just hit reported numbers. They didn't. The numbers weren't as strong as people had expected, so they crashed even harder. They've been kind of on a downtrend since last summer. And but they've got fantastic numbers, a great balance sheet. They've got great growth, and I'm good with ELF. Anything under 50 PE for me is a great opportunity. So anything under $92 a share for me is where a 50 PE is right now. So I'm good under $92 with ELF, and as long as it stays under that, I will continue to pick up more of ELF. You can see here, these were the past few days. This thing was trading, well over $100 a share. And so you can see it was holding that level for a while, that above a 50 PE, and then we just crashed down below it. So anywhere, down here at this level, I really like it. Even if it drops further, I'd love to pick up more shares of ELF. Great company. So Okta is the next company that I'm actively investing in. Okta is just flipping over into profitability. They've had the last 2 quarters have been profitable. So Okta's the only company I own right now that I'm looking at the forward PE. I normally look at the regular PE that looks backwards. But with Okta, since they haven't had a full year of profitability yet, I am trading them with a forward PE in mind. And for them, I like anything under a 35 forward PE, and that would put us anywhere under around the $103 range. So that's kind of my line in the sand for Okta. They've got great growth, great numbers. And like I said, they're just now flipping into profitability in the last couple quarters. They've got companies like FedEx. They're basically Okta is a cybersecurity company. So this range down here is a great range to be buying, but I'm actually picking up shares under $103. I am up in this position, over 11%. And so it's done well since I've bought it. Obviously, I've got only $600 and something in this position, so it's another small position that I'm actively involved in. But let's look at more of the positions I'm holding. Obviously, we talked about Alibaba. We talked about Air, which I think is at a buy right now, but I'm not really willing to pick up any more shares right now. But Zoom. So Zoom, like I said, I am down in this position. Overall, I've been holding this for a couple years. This was a great learning opportunity for me. I bought this when it was it was at a dip. It was probably somewhere around this range here. I like Zoom's numbers, but they were definitely overvalued at that time, and that was a really hard lesson to learn as it continued to crash and crash and crash. Now, I really do like Zoom. They've got their growth is steady, but it's very minimal. But they've got a great balance sheet. They've got great cash flow. I think Zoom's in a position where they might be acquired by another company, and a good acquirement. I mean, because if they did get acquired, their shares would pay out really well because they are in such a good position. I think Zoom would really benefit another bigger company if someone decided to buy them out. So, and that'd be fine with me. But elsewise, if they are not acquired, they're putting a lot of time and effort into R&D. And I do think if Zoom continues to really push themselves, they will they'll kind of break that glass ceiling and really figure out a way to build their business. They're talking about getting into the the TV space, and they've been looking at some other things. So they're actively trying to figure out what that glass ceiling is and break through it. And their numbers are just great. Obviously, the biggest problem with Zoom right now is their revenue growth is just, it's growing, but it's growing at a really slow rate. But I like them. I like their numbers. I'm definitely willing to hold this thing for the long term. Obviously, this position is up around 4,000. My position in my Schwab account was down around 10, so I'm down around 6,000 on this position overall. Now, this cost average here is $68 a share, but overall, I'm somewhere between both accounts. My cost average base is around $96 a share. But this is a big position. I've got 21,000 in this account, and I've got what in this one, 27,000 in this account here. So I think it's my second biggest position behind Shopify. Shopify is my biggest position, but the next is Zoom. So let's look at Shopify. So Shopify, I have a very small position in this portfolio. It was only like a $1,000 position, but it's like up 130% in this portfolio. I've got almost $2,500 in this one. It's up almost 140%, $1,400, but very small position compared to my Schwab position. Over here, I've got over 78,000 in this position. Shopify's doing really well. Like I said, overall, it's been a double up for me between the average of this portfolio and the other one. So definitely my biggest position and the one that's performing the best. So I'm been really happy with Shopify. It's been doing really well. Okay, the next one on the list, PayPal. PayPal, everyone knows PayPal. They own Venmo. They own Braintree, which is another part of their business. This account has some, and I've got a smaller position in my Schwab account. I'm up over 30% in this account, and I'm just holding right now. Obviously, they had a pretty big crash as well, after 2021, and I was buying this spring of 2024. Obviously, where were we? Yeah, around this area here. So definitely a good place to be buying PayPal. In my Schwab account, PayPal, yeah, I've got over 6,000 in this one. It's up $110. So my cost average here is almost $78. So this one was 60. What was it, 78? Was that what it was? Yeah. Yep. Almost 78. Okay. So that one's kind of about break even. And this position here is the one that's doing really well. So after PayPal, that about solves it. That's about all. That's all the stocks I'm holding. So, and like I said, that's we've pretty much been running. My account has been running sideways for the past month or so, but I'm happy with it. This is the 1 month chart. Now this jump right here was when I combined my Robinhood account to this account, and it said it was a growth, but really it was just adding that account to this one. Yeah, so doing well, kind of sitting around all-time highs between both portfolios right here around the 185K target. I really love to hopefully see by the end of 2025 over 200K. That shouldn't be, as long as the market doesn't crash, which it could. Who knows? We don't know what's going to happen in the next year, but as long as it doesn't crash, this should be above 200K by the end of 2025. I don't like to put goals on what my portfolio value is, in a year, or even really growth. I've averaged 25% in my long-term investments over the last 8 years, 25% per year. But I don't I don't go into a year saying I want to do better than 25% because I can't control the market position, what the market does. The only thing I can really control is, my goals are usually, continue to invest, 25% of my pre-tax income, and invest in companies that are great companies at great values. I've got kind of a checklist that I follow to find good companies. So, my goals are really just to continue to invest, the money I have available into great companies and not really focus as much about the returns, because as long as you follow, as long as you're actively investing and you're investing in great companies, the results will follow. And, another goal you should always have is to try to learn something new. Every year I want to learn more and have more knowledge about investing than I did the year before. So that's usually one of my yearly goals as well. Obviously, my goal with buying individual stocks is I want to outperform the market. I did outperform the market last year. I want to outperform the market this year, but I also know I hold stocks that if the market crashes, the S&P 500, if it drops, 20% in 2025, we're around all-time highs on the S&P or close to them. If it drops 20%, over the next 6 months, my portfolio will severely underperform the S&P, because when the S&P is going up, the stocks I own do really well and they outperform. But if the market crashes, my stocks will underperform. They're going to crash harder than the S&P crashes. And that's just how it goes when you buy individual stocks. Now, in the long term, it always does bounces back and outperforms, because the average numbers are we have a stock crash every 8 to 10 years or something has been the average, and stock crash being the stock market drops more than 20% from the heights. So if that only happens once every 8 to 10 years on average, and the other years it outperforms the S&P, in a big way, overall, I'm always going to be outperforming the market. And I have over the last 8 years as far as my long-term investments. So kind of, lengthy video there, lengthy talk about my portfolio. Comment below, what are you buying? What are you looking to buy? Are there any stocks out there that you're waiting for them to drop under a specific price? Let me know in the comments. There's a lot of, and people have talked about uncertainty moving forward here. With, is the market going to crash? Some people are very pro President Trump and the things he's doing. Some people are very anti-President Trump and the things he's doing. With this channel, I really don't want to get into, political opinion. Obviously, there are things there that affect the economy. There are things that make the stock market go up and down. Trump is really good at making the stock market go up and down. Trump likes to talk. He likes to say a lot of things, and the market reacts to those things. So there's a lot of volatility in the stock market under Donald Trump. You can't argue that. But so anyways, moving forward, comment below. I try to respond to every comment. Please like and subscribe. This is just kind of a vlog about my stock portfolio, what I've got, what I'm holding. I've done one of these videos before. I'll probably continue to do these, once a month or something, just so you can kind of see my investments, what I'm doing. Every month I talk about stocks I'm buying, and anytime I find a new stock I like GigaCloud, which I haven't bought yet, I will post about that and go into detail. So, check out the previous videos where I go more in depth into the companies that I'm buying. I go more in depth into the fundamentals of these companies, and talk about what prices I like, that are, in my opinion, good deals on these companies to hold for the long term. So that's it. And I hope you'll have a good night. If you have any questions, comment below, give them to me. I'll answer them to the best of my abilities. But y'all have a great day.